This is going to be a big one to tackle, boys, and it's a $3.5 billion bet on Bitcoin becoming a reserve currency. This is really surrounding UST, essentially, and I'll pull this up on CoinMarketCap. What we saw was essentially a huge dip in a stable coin called Terra USD, which its short was UST. And part of the reason is because this is one of the stable coins that is not backed by the US dollar. It's manipulated by essentially an algorithm that also, unfortunately, affects Luna as well. And so this is important to understand, because what ends up happening is when you have to recover one, you have to basically take from the other. So Luna has to essentially kind of be burned in a fashion. We'll be going over it in the article, which means that now not only do you have a stable coin that went severely below the US dollar peg, but then it affects the price of Luna, which is essentially the coin behind that. So if we took a look right at UST, you end up having basically down to 91 cents when it should be at $1 if it's a stable coin. Yesterday, it broke down all the way to 68 cents at its low, which is incredibly difficult, right? But you can see here, Terra is down 50% as well. So why did that happen? Let's get into it. All right, so a crypto project, Terra, is buying billions in Bitcoin to support UST, a controversial stablecoin. Its creator, Do Kwon, believes Bitcoin can become the, quote, reserve currency of the Terra ecosystem. That belief is being put to the test as UST falls below its $1 peg. A multi-billion-dollar bet that Bitcoin can act as a reserve currency for the crypto economy is already being tested as UST. A controversial stablecoin struggles to maintain its $1 peg. UST dropped close to 99 cents over the weekend, fueling fears of a potential bank run that could force Terra, the project behind it, to dip into a $3.5 billion pile of Bitcoin to support the token. Now the Luna Foundation Guard, an organization created by Terra's inventor Do Kwon, says it will lend out 750 million US dollars in Bitcoin to trading firms to hold UST's price peg. But that's done little to assuage investors' concerns about the implications for Bitcoin. What is UST? Developed by Singapore-based Terraform Labs, UST is what's known as an algorithmic stablecoin. It aims to carry out the function of stablecoins like Tether, which track the price of the US dollar, but without any actual cash held in a reserve in a reserve to back it. And that's the important part to note. Just from the face of things, right? You don't actually have something that's backed by the US dollar. They don't have a reserve set aside, which is a little outside of, how a lot of other stable coins work. Instead, UST, or Terra USD, is created by destroying a sister token known as Luna, using smart contracts, lines of code written into the blockchain. Quote, if you've got, say, 405 US dollars and you burn one Luna, you should be able to mint 405 of the UST stablecoin, end quote. Carol Alexander, professor of finance at the University of Sussex, explains. The same applies vice versa. New Luna is minted by burning UST and other algorithmic stablecoins that Terra supports. Terra's protocols also feature an arbitrage mechanism where investors can exploit deviating prices in each of the tokens. For example, too much demand for UST may result in its price topping $1. That means traders can convert $1 worth of Luna into UST and pocket the difference as profit. The model is designed to even out supply and demand for UST. When the price of UST is too high, users are incentivized to burn Luna and create new UST, increasing the stablecoin supply while also decreasing the amount of Luna in circulation. Quote, the Luna becomes more scarce, which makes it more valuable, transferring that value into UST, end quote, Alexander says. Now, I've never really been a huge fan of this entire kind of process of burning something to manipulate the price. And as we saw, of course, with Ethereum, in the problem with Ethereum part 2, is all that really does prove is that you can make deflationary a bad thing as well. And it appears that we are seeing that play out with UST and Terra as well, in my humble opinion. When UST's price is too low, the reserve happens. UST gets burned and Luna is minted. That should, in theory, help stabilize prices. But here's the problem. This assumes normal market conditions, said David Marino, a research analyst at Crypto Compare. Quote, during periods of high volatility and one-sided buy-sell activity for UST, the above stabilizer may not be sufficient to maintain the peg in the short term, end quote. There have been multiple instances where UST is decoupled from its $1 peg, raising concerns about the viability of its economic model, particularly in a situation when several people try to redeem their tokens at once. And here the funny part about that, of course, is what happens when, of course, the price starts taking a dive. Well, a lot of people start performing this, which means you see that huge dip like we saw, right? The latest challenge arrived over the weekend. Something fell. Over the weekend, hundreds of millions of UST was sold on Anchor, Terra's flagship lending platform, as well as Curve and Binance, resulting in accusations of a, quote, coordinated attack, end quote, on the stablecoin. Quote, men will literally attack a stablecoin unsuccessfully instead of going to therapy, end quote, Do Kwon, the South Korean crypto entrepreneur who co-founded Terraform Labs, said in a since deleted tweet. Yeah, that's a bad take, bro. How about just get the math right? I'm just saying, just you could get the math right. I think that was a rough tweet. Probably a good idea to go ahead and delete that one. Reserve currency. To address concerns over the sustainability of the stablecoin, Kwon plans to buy up to $10 billion worth of Bitcoin through a nonprofit called the Luna Foundation Guard. These funds would provide a backstop in case of dramatic fall in the value of UST. So it sounds like to me the algorithm didn't work, so they kind of backpedal and now they have some sort of backup or reserve currency to base that off of, which is kind of funny. It seems like to me, just from my perspective, how it was supposed to function without it being backed specifically by the US dollar is not the way it's going to function now. Yes, they're buying Bitcoin to back it, sort of, but it's the value there that's needed, right? So it's kind of odd. The idea is that Bitcoin would act as the reserve currency for the Terra ecosystem, similarly to how central banks hold large quantities of dollars in their foreign exchange reserves. LFG bought another $1.5 billion in Bitcoin last week, taking its total reserves to about $3.5 billion US dollars. However, on Monday, the organization said it is taking steps to, quote, proactively defend the stability, end quote, of UST. That includes lending $750 million worth of Bitcoin to trading firms to protect the UST peg, and further $750 million in UST being lent out to buy more Bitcoin, quote, as market conditions normalize, end quote. Quote, in case of most of these algo stablecoins, we have seen that the teams behind the project usually need to step in. So these are not fully decentralized or managed independently yet, end quote, said Vijay Ayar. head of corporate development and international at crypto exchange Luna. And that's obviously been a problem with stablecoins since the beginning, which is that argument or that debate between centralization and decentralization and needing centralization for the reserve currency for, of course, stablecoins. And I think, at least from my perspective, part of the reason why Luna was going to be built this way was to go further or closer, or at least be able to advertise closer to what would be a more decentralized stablecoin. But it doesn't seem like it's really possible for that to be a thing. But that makes sense because you are essentially trying to peg it to what is a centralized currency, right? So it's a problem with stable coins in general, I think. And, you know, eventually I would hope you get away from stable coins completely. Personally, that's the idealistic future goal, right? Your stable coin would be Satoshis or Sats. It wouldn't be something pegged to an external currency that's not on chain, right? Investors are worried that UST's Bitcoin underpinning will result in further pain for the cryptocurrency. The world's largest digital coin dropped below 33,000 US dollars on Monday, slumping to its lowest level since July of 2021. It was trading at about $32,921, down 6% in the last 24 hours. LFG's intervention, quote, will add to the selling pressure, end quote, said Derek Lim, head of crypto insights at Bybit Exchange. Quote, BTC will likely go lower before it bounces back when short sellers take profit, end quote. Quan insisted LFG is, quote, not trying to exit its Bitcoin position, end quote. So that's good. Quote, as markets recover, we plan to have the loan redeemed to us in Bitcoin, increasing the size of our total reserves, end quote, he said. The plan is to eventually allow UST holders to redeem their tokens in exchange for Bitcoin. Bitcoin would play the role normally taken by Luna in a crisis scenario. And I think that's also why you see this happening to Luna, right? The huge dump happening in Luna is partly because of the way they're changing this up. Previously, you would redeem the tokens for Luna, but now you can, in the future, redeem them for Bitcoin. It kind of hurts them in a certain from a certain perspective, right? But this is still weeks away from being implemented, and it's unclear how it would work in practice. The biggest risk moving forward would be another depegging of UST, forcing LFG to liquidate its Bitcoin holdings, said Hendo Verbeek, head of quantitative trading operations at Faculty Group. That could in turn result in further liquidations of, quote, over-leveraged buyers, according to Verbeek. Quote, this is a nightmare scenario which looks like a real outcome of events, end quote, he said. So that is what's going on with UST and Luna and the big crash. It is related to mining because it is one of the latest parallel assets for Flux, right? It was just added last week during the snapshot, so it's important to pay attention to it. And it would be pretty bad if they ended up liquidating themselves out of existence completely. It would also impact mining directly because we would lose a parallel asset. My question would be to Flux in general, by the way, what happens if one of the networks that a parallel asset runs on goes broke, right? What if it goes out of existence? What happens at that point to the Flux parallel asset? Now, if you're mining on something like Miner Pool where they do the conversion for you and then go ahead and pay out to your Flex wallet, that's probably the best option to protect you from that sort of scenario, but it won't fully protect you because clearly if it has to get removed all the way, then it has to get removed all the way. It's just a question that gets brought up from my perspective for Flux and parallel assets because you are essentially having some sort of reliance on other networks, and I think that it makes sense. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here Or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.